Okay, good.
Ladies and gentlemen, please welcome the President of Ariel Investments, LLC, Ms. Melody Hobson.
Good morning. Very excited to be here today, and obviously a historic time in America and a historic day with it being Martin Luther King's birthday. And if there were ever a time for a panel on refreshing the economy, I can tell you I work in the investment business and do work for Good Morning America and ABC News, and this is the time to talk about refreshing the economy. So we have an outstanding group of individuals here today to talk to us about what's been going on in this country and what lies ahead in this country and the world, I should say. So we're going to start off with our first panelist, Dr. Andrew Brimmer. Dr. Brimmer was the first black man to be named a governor of the Federal Reserve System. He has an incredible record. He's a noted economist. He heads his own successful Washington consulting firm, Brimmer and Company, and he's considered a specialist in Federal Reserve policy. Now, I can tell you one of the things about Dr. Brimmer that really took me by surprise. He has an amazing educational background. He was a Fulbright Scholar in 1951. So, obviously, extraordinarily educated and great to have on this panel, and you can have a seat, Dr. Brimmer. Next individual we have is someone I actually work with and know very well, Robert Wolf. Robert Wolf and I met while he was on the Obama trail and working for President-elect Obama to get elected. He also is President and Chief Operating Officer of UBS Investment Bank, one of the largest financial institutions in the world. He's Chairman and CEO of UBS Group of the Americas. So in short, he's a really big deal. He has a long list of philanthropic involvements. He graduated from Wharton, and he has a BS in economics from Wharton as well. Next, we have Maya McGinnis, and she is the Director of Fiscal Policy for the New America Foundation. And the New America Foundation is a bipartisan organization, and she oversees their efforts to bring accountability to the budgeting process. She addresses the challenges presented by the nation's underfunded entitlement programs like Social Security. She worries about things like that. And she also works on tax reform. So she has a really wide breadth of experience and policy experience especially that hopefully can help make our country better, and writes about those things. And she's been published very, very broadly and very well noted and accredited around. Next we have John Fund. He's from the Wall Street Journal. How many of you have heard of that organization? John writes the weekly column called On the Trail. I actually read them. When I sit down to read my journal every day, every week when he's in there, I read them. He also wrote a book called Stealing Elections, How Voter Fraud Threatens Our Democracy. He wrote that in 2004. He's been at the Journal for quite a while, and before that he was a research analyst in the California State Legislature. He has lots and lots of experience and, again, well known in this area of economic issues. Next we have Anna Berger, who's a friend of mine. And Anna Berger is the Secretary-Treasurer of the Service Employees International Union, based here in Washington, D.C. Anna didn't just wear purple for Barack. Their color is purple at the Service Employees International Union. And if you ever meet anyone from there, they wear purple wherever they go to try to spread the word and brand the idea of what they're trying to do. They are the largest and fastest growing union in this country. And Anna's partner and colleague that she works with, Andy Stern, is also a good friend. They've done amazing things for workers. Really, really great work. She's also the chair of Change to Win, which is a confederation of 7 unions representing 6 million workers in this country. She's the first woman to ever be chairperson, I should say, of that organization. And Anna knows a lot about labor and labor issues, and especially those issues affecting people who don't have a voice. So she represents people like hotel workers and hospital workers, really, again, people who are very important to our society but don't have a voice. Next, we have Michelle Singletary. I've known Michelle for quite a long time. You, I'm sure, have read her column here in the Washington Post called The Color of Money. Michelle is syndicated in over 120 newspapers, and again, as I said before, here at the Washington Post. She's done a fantastic job writing about issues related to money and investing, and you can read her everywhere from the Atlanta Constitution Journal to the Miami Herald to the Boston Globe. And in 2006, I should say, she launched her first national television program, Singleton Says. So we'll hope to hear from that. That's on TV1, and we'll hope to hear some of what Singleton says in this panel today. But again, she's appeared on lots and lots of shows, very well known in the industry around issues related to money. So it's great to have Michelle here. Last but not least, we have someone that I think you all know, Dr. William Spriggs. Professor Spriggs is the chair of the economics department here at Howard University. He's been doing that for 3 years. His economic research focuses on labor issues, and he is also the chair of the Healthcare Trust for the United Auto Workers Retiree Fund. When he told me that, I was like, wow, you're really busy right now, because we know how the car companies have been really, really struggling around some major issues and clearly have been a recipient of bailout money, but a lot of it centers around some of the retirement issues that they have there. So it'll be great to hear from him and what he thinks might help refresh the economy, especially when it comes to one specific area, which is our auto industry. So this is our esteemed panel, and we'll get started. So my first question, which I'm going to open up generally to the group, and the way this is going to work, each panel member does not have to answer. At times I'll call on them specifically around areas of expertise. But the first thing I want to ask about really is sort of how you're feeling from a perspective of optimism or pessimism around the current economic state of America and the world, if that's something you want to comment on. And I just, as briefly as you can, give us a sense of your economic outlook or mood. Dr. Bremer, I'll start with you.
Thank you very much. I'm optimistic, but not wildly optimistic. The real problem in the world began here in the United States. It remains here in the United States, but it's spread around the world. The hope of the Obama administration, I should say President Obama, is that the stimulus package that the House has put forward a few days ago will not only be passed, adopted, but be implemented. And that's what concerns me more. Not that I would be wildly optimistic if I could be assured that the package would in fact be implemented. Okay.
Robert.
Of course, I want to thank Spike for doing this. This is quite an honor to be part of this panel. Well, I've been on Wall Street for 25 years, so I guess the thing that comes most to my mind is being humbled. Every 5th year, we usually have a down cycle, but nothing to this extreme. And I think no one could have been ready for this. Maybe some people in hindsight say they saw it coming, but they're very few and far between of those people. And I think that, my biggest concern is unemployment. I think we're really kidding ourselves right now to think we're in any type of stabilizing environment. I think, if you include those people who aren't part of the unemployment rate because they're actually, quote unquote, not looking for a job, you have to believe we're already near 10% or that type of environment. So I think it's just it's a very tough situation here and around the world, and I'm hopeful that with Barack going into office that we can get, as the doctor said, the stimulus package moving quickly and the TARP funds being used appropriately.
So that sounds like pessimism to me.
Well,
I don't hear a lot of, so would you say you're more negative nearer term?
I think that 09 is going to be tough, and I think it's going to be a long tail.
Okay.
Great. Ooh, that's loud. Yeah, I'd like to start also by adding my thanks to Spike Lee. This is really a neat thing to be a part of. And this morning when my 4-year-old son said, "Mom, you can't go give a talk. It's Martin Luther King's birthday today." it feels like this is the right place to be celebrating that in many ways. Sorry. Can you hear me? Okay. So I'm going to say I'm awfully pessimistic. I think the economy's in bad shape, and I think it's in bad shape because we've been doing a lot of damaging things to the economy for not just years but decades, where we've been spending beyond our means, permitting growing income inequality to kind of permeate the economy. There are a lot of things that have to be righted, and we can't do that immediately. That said, I'm very encouraged about the new administration. I think President-elect Obama has been saying all the things that reassure me that their economic team and that their agenda really is completely on target with what we need to be doing. So I'd say first, we have to pass some kind of stimulus package, and I think what's critical, and I think that we're on track to do this, is that it be economically based, not politically based. If we start seeing the same kind of partisan pork that gets thrown in a lot of things to make sure we have enough votes, it's going to lose all the credibility. This is an economic package, but it's also a psychological package. It has to reassure us that we are one step ahead of fixing the economy. Second, I think President-elect Obama has been very good about giving all of us a heads up that there's more to be done. After we borrow $1 trillion or more to help stimulate the economy, we're going to have to find a way to repay all of this borrowing. And he's really looking at a lot of the broken parts of the budget that have been there for years, but also have been neglected. He says he's going to reform parts of health care, parts of Social Security, fundamental budgetary problems that have been neglected. So he's not just going to say, let's spend $1 trillion, pat ourselves on the back, and we're done. And then finally, I think he's using this in an incredibly encouraging way to be a transformative change to our budget. So if we can, without sort of political bias, add some kinds of things to the stimulus package that do help with energy policy, increasing education, infrastructure that's crumbling in this country, but not just look at we can borrow this money and leave at that, but find ways to pay for those costs once the economy has stabilized, I think we will be able to shift our budget from a budget that has emphasized spending and not always in the best places to one that emphasizes investment and really thinking about a longer term horizon. So just to conclude, I'm very encouraged that he's setting the tone for it's going to take some hard work. We can't expect the economy to turn around right away, but I think if we do this right, we could see a lot of improvements that come out over the long term.
John.
Martin Luther King was all about solving problems. I think that's the work we're about today. Of course he would want us to meet on his birthday to help try to solve problems. I guess my perspective is that Barack Obama, if at all possible, should avoid some of the biggest mistakes of the Bush administration. And they're not always the obvious ones. The Bush administration often let its ideology, its principles, trump the facts, the reality on the ground. And eventually reality bit them. We saw that in the war in Iraq. We saw that with his desire to overcome the bursting of the internet bubble and 9/11's economic downturn with a lot of easy credit. And we're paying the price for that easy credit. And also the weak dollar policy. And a year ago, in a desperate attempt to stimulate the economy, he sent out a bunch of rebate checks. And we all know how much good those did to stimulate the economy. Not. So I think that Barack Obama can learn from those mistakes, and I think that he should recognize the great irony of American politics. Sometimes your biggest problems are represented by your friends and not necessarily your enemies. And some of his friends may have all kinds of interesting ideas for the economy that may not make sense. For example, Nancy Pelosi talks about raising taxes this year. Well, if you can name me a single school of economics that says you should raise taxes in the middle of a recession, I have some money that I'll contribute to one of your favorite charities. So I think Barack Obama has one great advantage. He has enormous goodwill, including, believe it or not, from many Republicans. And he can take that goodwill in a good direction, as we've heard before, for sound public policy, or he can move it in a more political direction, as some of his friends on Capitol Hill want. And I think we're here in part because of Spike Lee, and I remember what Spike Lee said, do the right thing. And I always believe good things happen when you do the right thing.
That's great. You can tell he writes for the Journal, can't you? It's good.
So again, I'm proud to be here with this esteemed panel with all of you as we talk about the important issues facing working families across our country. Now, I am an optimist about the situation right now because I actually think that we are in a transformational time in our country. We've just come through a transformational election when people talked with each other about issues in a way that they had not talked to each other before. It happened in the workplace, it happened on the streets, it happened in our communities. Across the country, people came together and talked through what was really going on and what was important, and made a decision to elect Barack Obama and lots of members in the U.S. House and Senate who were out there talking about how we could come together as people, solve our problems as people, and address and really reclaim the American dream. This was a transformational election because people said, we are putting our economic interests of all of us together first, that we are going to come together to solve those problems. It was transformational as well because people said that the trickle-down economic policies of the past did not work. We wanted to flip this economy over and put workers back on the top of the agenda again. And we elected Barack Obama, who's a transformational figure, who has transformational policies about how do we really address the critical issues that are confronting people today. Now, the reality is we are in the worst economic crisis of our country since the Great Depression. It is ugly out there. Representing working people who are losing their job, I hear it and I feel it every single day. Representing workers in the private sector who are losing their jobs, and workers in the public sector who provide the critical services of our community. When people are in crisis, they need those services the most, are waking up and hearing about layoffs and dramatic cutbacks. So I feel that. But the reality is we need to act boldly. We need to act transformationally in a big way. And I think that's exactly what the Economic Recovery Act that Barack Obama is proposing does. It talks about putting people to work. If we're going to turn this economy around, we need to invest in our communities and invest in people. We need to rebuild our roads, bridges, and water systems that are crumbling beneath our feet. Now, I live in Washington, D.C. I feel that crumbling, and we see what's happening here, but it's across America, in rural areas and in urban areas as well. We need to rebuild that. We need to put people back to work now, rebuilding our infrastructure. We need to invest in our future. We need to get off of our dependency on foreign oil. We need to invest in energy. We can do that by investing now, creating jobs that can be good jobs, that can be long-term jobs that are building out our community and solving our energy crisis at the same time. We clearly need to invest in healthcare. We know that that's the #1 economic issue confronting working families, and that we can, in fact, take a step in this economic recovery plan by working on IT and other systems that can streamline and build on the program that he's going to adopt later on this year that will address healthcare for every single man, woman, and child in America. Again, good jobs for the future, for the long term. We need to invest in our schools. And we can do that in this economic plan as well. And that puts people back to work. It gives them the ability to invest to buy in their community. It helps the entire community. And I think it's the first step that we need to take for this economic crisis, but for the long-term investment in our future as well. But I would also say, besides the Economic Recovery Act, where we put people to work, workers have to be able to turn those jobs into good jobs. A job in America isn't a good job unless you have a voice in the job that can share in the prosperity of our country and our companies, so you can share and have that. So we think that the Employee Free Choice Act, a way for people to be able to have a voice in the job without intimidation and threats by their employer, is critical to turn the new jobs into good jobs. And finally, to really create the American dream, every single man and woman and child in America deserves to have health care. It's a right, and we need to adopt health care for every single man, woman, and child in America this year, not next year. And if we do those three things, we begin to build the infrastructure of a new economy that works for all of us, and we claim the American dream for working families across this country, and in a sense flip the economy over and shrink the economic divide and start lifting working families up. And so I am optimistic because I believe in Barack Obama, I believe in his agenda, and more importantly, I believe in the people like my members out there, men and women who get up every day, who work hard to give their kids a better life, who are struggling to get by, who believe in Barack Obama, but also believe that when we come together and agitate and work together, that we can actually make Congress do the right thing by them. And so I'm actually excited because I think that we've transformed politics in this country, not just policy, but politics, and that we really can unite and make sure that we get this done.
Michelle.
I want to go back to your original question. So far, we've been talking about it in a macro sense, the larger economy. Am I fearful? No, because I've been handling my money well already. I breastfed all 3 of my kids because the milk was free. I still wear my maternity underwear, and my oldest is 13 years old. So I'm not fearful personally because I was raised by a woman who believed to live below your means. I'm fearful for most of you. 90% of you in this audience have debt. 90% of you in this audience probably are not going to do the things that it takes to survive this recession. And so I'm fearful for you. I have faith that this too shall pass, but it's bad and it's going to get worse. And I'm actually glad that we're having this recession. And I don't mean that in an insensitive way, because we were on a road that we could not sustain. We said that there was something called good debt. There is no good debt. There is no good debt. Not student loan debt, not mortgage debt, not credit card debt, not car loan debt. There is no such thing. You drank the Kool-Aid, and that's why we're here right now. I'm looking out this audience, and I see a lot of seats that are not filled. And some of them people are out there in the mall buying T-shirts and all that kind of stuff about, you know, I'm glad that we have a great administration coming in, but guess what? Barack Obama is not the second coming. He can only do but so much. And I'm a little annoyed by all this stuff going on that doesn't sort of take the focus back to how we're going to get out of this. You have got to stop spending more than you make. You have got to start taking on debt and credit. He's going to give you that little $250, and what you going to do? Most of you are going to go ahead and spend it when you should be putting it on your student loan debt. So is this plan going to really help? Maybe. But the key thing is to create jobs. You are absolutely right about that. And if you're here and you're a student, you know, I would encourage you to stop taking on more debt. If you want to go to graduate school, I went to graduate school, paid cash for it. So, you know what? I wish there were more people here, and I wish the focus was back on what we individuals are going to do, because Barack can't do it all. And he's got a lot of stuff up on the hill that he's got to fight. And right now, the plan that's on the table is the same plan that Bush proposed. You know that tax credit we got before? Did that help? No. So I'm going to keep doing the way I do. I bought this jacket for the day. I didn't go out and buy no clothes. Spike asked me to come here. I said, you know, I'm not going to spend no money for Spike.
So what did you say?
I'm not going to spend no money for Spike.
Okay, we can see why her show is called Singleton Says, right? Whew, I'm starting to feel bad. And I'm doing okay.
That's why I'm going to end there, because, you know, I'm going to be the contrarian. But, you know, I just wish that you all would take heart to what's going on. And I actually hope the recession lasts long enough that we have the memory of how bad it was. If it ends too soon, we're not going to change. Change is not going to come.
All right, we'll come back to Michelle. Dr. Spriggs, are you optimistic, pessimistic, somewhere in the middle?
Well, first, let me welcome you to our campus. It's good to see you here on our campus. And thank you to Spike Lee. It may seem a silly thank you, but the honest to God truth is many people come to Howard University, they want to tape on our campus, they don't want to give tickets to our students, and they don't want to hear from our faculty. So I want to say thank you that we have students here and you have had our faculty on these panels. In the near term, I'm very pessimistic because we should have had a stimulus package passed 6 months ago. What we're about to see is the continuing of this avalanche of job loss. As Anna mentioned, we're going to see job loss in the public sector, one of the small sectors where we did have job growth. We're going to continue to lose jobs in construction, one of the small industries in which we did have job growth. And we're going to lose jobs in the retail sector at a tremendous rate. So in the next 4 or 5 months, we will lose probably another 2 million jobs. And then it will be clear to us why, as Dr. Bremer was talking about, we need the stimulus package now. We need to get jobs started now. It should have been done 6 months ago, but the sooner we can get that addressed, the better. I'm optimistic because we have an administration that is not going to be ideological, is not going to let the facts overwhelm it. They are on the job. They are paying attention to what we need to get done. But I'm also optimistic because I think this recession and the particular nature in which it came about has humbled some people. And if we're going to get some reform in our economy in order to do, as Anna talked about, to encourage people to understand we need to not have a stimulus package, the administration is saying this is an economic restructuring package. We need to restructure our economy. We need to grow it from the bottom up. But finally, after those who aren't God-fearing had decided we could worship the market and we could have the princes of Wall Street tell us what to do, well, the princes of Wall Street came crying like babies to Washington, to us taxpayers, saying, give us $750 billion, $750 billion, I say that again because those of us who talk about what's right or what's wrong, when we talked about health care, well, you can't have money for health care because that would be too expensive. That would hurt the economy. Well, after you lost $750 billion, that means you've lost the right to lecture me about the economy. And that means that the rest of us have the ability to now have a voice, an equal voice, a deserved voice of talking about how the economy should be shaped. My fear is that one of the things that the Bush administration ignored is that we do not have a safety net in this nation. So that in 2001, when we went into recession, the people on the bottom just kept falling. There was no net to catch them. And it's like what we saw in Katrina. You took a major American city and you shut it down. And the rest of us went on. The economy went on. We didn't have a recession that quarter. We didn't even see the GDP number blip one little tiny bit. And the rest of us ignored the fact that we didn't even bring the city back. Similarly, for those at the bottom, income inequality is so extreme in this country that the bottom 20% of American people account for 3% of the economy. So that means that if they have a really bad time, as they did, if they lose 8% of their income, in other words, if they have to live on 12 months of the year on 11 months worth of earnings, that's an 8% cut. To the rest of us, that's 0.2%. That's 0.2% of the economy. So the rest of us treat it like the air got out of the tire. Okay, so my tire's doing something funny. Maybe the pressure light comes on in my car, but I'm going to keep rolling. We're going to keep rolling over them. So one of the important things is to understand that we need a safety net. It's a safety net for the economy. It's not just for the individuals. And we have an administration that is probably more concerned, not just in the ideological perspective, but in the real perspective of looking at the numbers and caring about the fact that people at the bottom are about to fall through the floor. And they understand that the poverty numbers will probably go up and that they're going to try and do something about it. Not just because it's good for the people at the bottom, but an understanding that that's going to help the economy. That's what the safety net was put there for initially. So I'm optimistic because we have the right people in charge at this moment to deal with this crisis. And we have some people who I think now know that they don't have to be coward or scared of or frightened into being quiet when we hear those who are supposed to be the economic experts talk to them, and that they will feel empowered after this humbling that has taken place to say, you know what, maybe somebody else could drive the car too.
All right. Well, that was quite an opening. Now we're going to get to some specifics. And the panel seems to be split, sort of half optimistic, more or less, and half pessimistic, as I kept score here, which is interesting, for whatever it's worth. I want to start with Robert Wolf because
Dr. Spriggs wants me off the panel.
I was moving around in my chair during the Princes of Wall Street discussion, I've got to say. I noticed my heart rate elevating. So since you are a Prince of Wall Street, I thought we'd start by giving you a moment. How did Wall Street get into the mess that it's in? And how do we refresh Wall Street? And why is that important, do you believe?
Okay. Thank you.
So you get to rebut.
Listen, I think all the comments on the stage are quite interesting. You know, there'll be two bookends, and there'll be a lot of books in the middle, and so there'll be a lot of ideas, and we need all of them. I think that, let me give you an example of UBS, because we were one of the first ones out with our problems. We were one of the first ones that diluted our stock pretty significantly and took in third-party money to make sure we had enough capital.
And your third-party money did not come from the United States?
Correct.
Just to be clear.
But where the United States was giving it, we take that too. So give you an idea, rates have been very low for a long, long time, you know, from Greenspan on up. And I think that it allowed everybody, from Wall Street firms to individuals, okay, to increase their balance sheet. okay, because borrowing rates were so low. A firm like UBS, which was a AAA firm, well-capitalized, one of the largest few firms in the world, our balance sheet ballooned to over $2 trillion. Okay, not billion, $2 trillion. And if I asked everyone in this audience, what percent of our diversified portfolio, all currencies, involved with 50 countries, over 100 exchanges, very diversified, stock, bonds, equity, real estate. What percent of a portfolio do you think was real estate? I think if I asked everyone to raise their hands, I might as well. How much of your net worth is more than 5% in real estate? Raise your hand. It's probably most of you, I would assume. Okay? So you take a UBS, well diversified, 5% in real estate. That's pretty good diversification. Well, that's $100 billion, and real estate's down 50%. And there's the $50 billion loss. It's not rocket science. It's pretty straightforward. The problem was the balance sheet. We were a big whale, and we needed to be a minnow. Because when liquidity started to go by the wayside, we needed to liquefy. And we needed to do it at the same time all the other firms were trying to do it. So I think at the end of the day, everyone really ballooned, okay, their balance sheets. That was the first problem. I think the way to get out of this is really going to be time. It's going to be losses. We're going to have public-private partnerships. We're going to have to go through a lot of pain, which is what we're doing. We're going to have to need government help. And nothing's going to happen overnight. What we need to do, and which is why I think the way the first $350 billion of the TARP was not used appropriately, and I'm glad that the next $350 billion will be back for trouble asset relief, okay, as opposed to necessarily capital infusion. I think it's important that we buy assets that off the balance sheet, we at the right pricing, we get leverage way down. Okay, firms are levered 25 times. And I think we need to then start making sure we go back and lend and invest appropriately so we can get the economy going globally. I think at the end of the day, we were just too big and not nimble. And, you know, people were going off of a 10-year bull market.
So I want to be specific. How much money did UBS take in to deal with the issues that were at hand?
$35 billion.
And $35 billion came from where?
Well, I would say half of it came in a rights offering from shareholders. The other half came from sovereign wealth funds.
Okay, and what does a rights offering from shareholders mean?
It means that they don't do them in the States, but they do them overseas. So if a stock is trading at 20, it means that we're going to sell everyone who's a current shareholder stock at 12. Okay, so it allows you, okay, to continue to have that percentage ownership in the company.
Without being diluted.
Without being diluted.
So you can keep your ownership, but more money is coming into the company.
Correct.
And then the sovereign wealth funds put in the balance. And for what do they get for that investment?
Well, the sovereign wealth funds we had were Middle East and government of Singapore, which is probably one of, if not the most well-respected sovereign wealth fund investor in the world. They get a preferred return, and they get to buy stock at was at that time a decent price.
So how is that different from what the U.S. government did? So the U.S. government gave JP Morgan Chase $25 billion. And what did they say to JP Morgan Chase?
They got, well, our sovereign wealth fund got a 12% return and got literally a straight percentage of our company. The current government solution, first, the firms that they gave money to was not dilutive, very little, and it was done more in a preferred convertible. So
they get a return over a certain period of time, correct? So the government didn't actually just give away $350 billion. There is an investment there that they're making. I just want to be clear, because when we hear things like there was this handout and a lot of people got money, there's a return, and right now the government has some assets on its balance sheet.
Correct.
Okay. Dr. Brimmer, you're the expert on Federal Reserve policy. So do you think this was a good use of the government's balance sheet?
Yes, it was. And more will be required, and that would be a good use as well.
And do you think that capitalizing banks was a good place to start, or would you have done it differently?
Well, I have something of an advantage since I've been at the Federal Reserve, but I've also been a director of Bank of America.
And Bank of America, just to be clear, how much are they going back for right now? Ken Lewis is, his Merrill Lynch acquisition, they need what?
At least $15 billion.
$15 billion.
But the point is not that this was a given. This was a recapitalization. This was an injection of capital. UBS owners already had an investment in the bank, and they were given an opportunity to make a further investment in the bank. But that investment was to recapitalize the bank. The real issue was the bank able then to lend again?
So tell me just again, because we want to be specific, what recapitalizing means. Just so that everyone understands what we're talking about. Because I find us Wall Street types can talk in jargon and assume the whole world knows what we're talking about, like doctors do sometimes.
Equity capital in a bank or in any other business is required to offset risk. And the banks have benchmarks. Without going into details, the Basel benchmarks require in the neighborhood of 8 to 10%. If the bank loses money, capital declines, it has to restore that.
So the basic idea is it's a way of making sure the bank has more or less some money there to cover losses and risk that they are taking.
Yes, but the Federal Reserve, Treasury, the Bank of England,
they make those rules.
European Investment Bank, European Central Bank were interested not simply in the bank's own safety. Banks have to provide the liquidity so that the economy can operate. And what happened was that the banks lost money, but they also lost confidence.
Right.
The banks turned away. Even good prospects found it difficult to get loans. That is the real crisis. And that is what has to be resolved, and it's going to take some time even to resolve
So
that.
how would you suggest so what happened was banks stopped lending. They lost money, so you have UBS, they had $100 billion in real estate, lost $50 billion sort of overnight, more or less. I mean, in the whole scheme of things, it was sort of a blink of an eye, $50 billion gone. So they say, oh my God, we've been making mistakes. Maybe our lending has been too laxed. Let's rein it in, and all of a sudden, no one's lending, right?
Well, actually, a few are lending. They're lending to the U.S. government.
And they're lending, but they're lending to the most credit-worthy of all borrowers.
Yes.
Where the risk is not great at all, right?
What we need is a willingness of not the big banks, but the ordinary banks, the middle-sized banks, lending to ordinary businesses to start making loans again.
Now,
In the absence of that, who is the lender of last resort these days? It's the Federal Reserve. Essentially, the Federal Reserve is taking on those risks which the banks, private banks, commercial banks used to take on.
So the Federal Reserve is lending money because the banks have been skittish,
Yes.
for lack of it. And they stopped lending to people like organizations like General Electric, AAA-rated company. Even General Electric, they were scared to lend money to.
Yes.
So Warren Buffett says, credit is like oxygen. You don't know you need it until you don't have it.
He's correct.
When it comes, and Michelle's shaking her head, so we're going to get there in a minute. Wait.
We're
We're
like a
going
lot of money. Of course he can say that.
No, we're going to, but you can't run a business. You cannot run a business without credit.
Yeah, well, clearly, they couldn't run it with it.
And Dr. Bremer, do you agree with her?
No, I do not agree with her, but I do like the tone in which she said it.
You know, you're a smart man. You're very smart. So getting to the point, how do you get money moving. What do you do? Because the first tranche hasn't worked. So we recapitalized the banks, but there's a little bit more liquidity, but not a lot. So what do you do to get money moving?
More of the same. I listened to part of the education panel this morning, and one panelist used the word, there are no silver bullets. In education, there are no silver bullets with respect to the economy, but there are bullets. And the stimulus package, other reforms are there, but it will take some time to do those. And in my opening comments, I said that what concerns me is whether the stimulus package and others moves will be implemented. Let us remember and accept the federal government, therefore President Obama, the president does not create jobs.
Right.
Jobs are created by the private sector.
Well, except if you do a construction job, you create jobs. Let me
know what the
You put money into the state government.
bill, you can read the paper.
if you build a highway, do people
But
have to build
ultimately,
a
I
highway?
think
Well, wait a minute. The federal government finances jobs. It provides the opportunity. It provides the liquidity. The jobs are created because
I'm starting to like this now, by the way.
jobs are the result of the demand for the good or the service. If demand falls off, the providers of that service reduces the payroll, because when demand rises, people want to buy, then the companies that produce the products or provide the service have to hire the people.
But Andy, when the federal government builds a highway, it is the contractor. When you sign the contract to build a highway, you are signing a contract to your state through the United States Department of Treasury. That's a job created because the federal government spent the money to build the highway. It is the federal government's highway. That's a job created through the federal government.
The job is not on the federal payroll.
No, it's not on the federal payroll. It's not on the federal payroll.
Okay, I think it's a nuance, but the point's well taken on both sides.
I have good news and bad news for you. The good news is, yes, you put money in infrastructure, you will put people to work. The bad news is this. We are already at a 27-year high in infrastructure spending. We already have all kinds of infrastructure projects around the country. Now, that doesn't mean there aren't a lot of good infrastructure projects. There are a lot of bridges that need repair. There are a lot of potholes that need to be filled. All of that work needs to be done. The problem is the shovel-ready projects that are available have basically already been passed over. Some people would call them pork. Some people would call them marginal projects. Some people would call them earmarks. All I'm saying is the shovel-ready projects, the ones you can get people working on right away, are probably of marginal benefit. The projects you really want to get people working on are going to take 6 months, 12 months, 18 months, 2 years to get going. That doesn't mean they shouldn't be done, but don't look to infrastructure spending to get you out of this recession.
So what do you
because of
do?
the time
What
lag.
do you look to? What do you look to, John?
In the last year, we lost over 300,000 jobs in heavy construction. You're correct. We reached a peak in 2007, or all time in terms of employment in heavy construction.
There's a time lag to get those people to work.
But that peak was in 2007, and in the last year, we lost 300,000 of those jobs, and we're continuing
I
to lose
defer to
them.
Dr. Bremer, who will tell you that infrastructure spending is not the panacea.
So there continues to be slack in the construction industry from that peak. All of the jobs that we added in construction under the Bush administration, we have lost in the last 2 years. So there's a lot of slack in the construction industry which we could absorb. Those million and some jobs that we lost in construction, both the green jobs that Anna talked about to do refitting of our buildings and our homes to make sure that they're energy efficient, as well as the heavy construction, can absorb at least easily that 1 million in slack that's already in place. You're correct, it would be even more monumental, but when you look at it from a historical perspective, the share of federal money going into investment, as Anna talked about it, as Molly talked about it before, that needs to get back to historic levels, and it has not been at historic levels in terms of the share of the economy.
You're arguing two different things.
And that's the way to look at it.
I'm not arguing infrastructure spending necessarily will be badly spent. I'm simply saying, I know, and I think Dr. Brimmer will back me up, there is no recession in American history where we have got out of the recession through infrastructure spending because of the time lag it takes. The recession is over by the time you actually can bring the big dollars in. There may be other reasons to spend on infrastructure, but don't look at it as a way out of the recession.
Okay, so let's be
and you can't
specific,
name me
John.
one recession
wait,
where we've done
let's
that.
be specific.
Not one.
What do you think, okay, and let's give context here. If you look at the last 10 recessions or so, the average has been about 5 months. If you look at the longest recession in the last 60 years, it was 17 months. We are 13 months in, 12 months?
Yes.
I guess 13 months in right now. So you're saying that by the time you pick up the shovel for these projects, more or less the recession is likely over.
Well, one of two
What
things.
would you do to get things going?
Well, one of two things. Either the shovel you pick up is for a project that's marginal or pork or that some congressman wants that may not be in the national interest, and Obama has said that he wants to get away from that, or the recession will already be ending and there'll be other things. The most important thing you can recognize is this. The enormous easy credit that was described, the fact that we were literally creating this housing and financial mania because we kept interest rates so low, and Alan Greenspan's reputation will certainly suffer for that, means that we have a lot of malinvestment in the economy, a lot of overinvestment. UBS and other companies spent a lot more money in areas because they got the wrong signals from the Federal Reserve. They said go out and buy, they said go out and invest, and interest rates were so low people did that and it was unsustainable. There is nothing you can't do other than work that out, but you can avoid some mistakes that we've made in previous recessions. And there have been some mistakes that we should avoid. One of them is the quick fix. What Bush did a year ago with the rebate checks, give me a break. I mean, you could have done, it made more sense to drop the dollars from helicopters. It didn't do anything. People who got it, either they had paid down debt or they saved money worrying about losing their job or whatever. So I think Obama, if he wants a tax cut that means something, he should listen to Robert Reich, who was Bill Clinton's labor secretary. What is the tax that is most onerous on the American people, both poor and middle class? It's the payroll tax. More Americans pay the payroll tax than pay the income tax. Let's have a payroll tax holiday, or let's cut the payroll tax rate on both businesses and individuals. That would actually be a big spurt of job creation. Not these one-shot little tax cuts, where your withholding check is somehow $5 more a week. That's not going to get you to do much. It's not going to get your employer to do anything. That's what we should do. The right tax cut,
Dr.
not the
Bremer
wrong
looks like
tax
Arnold
cut.
Horshack right now. Yes, Dr. Bremer.
And moderator, I wonder what it might be helpful for us to lay some facts on the table.
Facts are good.
The House of Representatives approved last week a stimulus package of $825 billion. What is the plan? It is expected that that bill will provide the outlines of whatever is eventually passed by Congress. This is what is planned at this time, and the Obama transition team has endorsed these. $275 billion will go for tax cuts for individuals and businesses. The key provision will provide a tax cut of $500 for individuals and $1,000 for couples. These results would be achieved by reducing payroll taxes and withholding. That's the first. This is a two-year plan. A two-year plan. $106 billion would go for aid for the unemployed and the needy. Extended job benefits and training would get $43 billion. Those who lost their job would receive $39 billion to help them keep their group health benefits under COBRA law. They would also provide $20 billion to increase food stamp benefits and about $4 billion would be used to increase Social Security benefit payments for low and disabled people. $119 billion of aid would go to the states. The funds would be used for health care and other essentials. $87 billion would temporarily increase aid to states from Medicaid. $25 billion would go for high priority needs such as public safety and services. $117 billion would be allocated to education. The specific uses would include funds for local school districts serving impoverished and disabled students for construction. $90 billion would be for infrastructure projects. These would include $30 billion for highway and bridge construction, $31 billion for repair of federal buildings and other public infrastructure and make them energy efficient, $19 billion for water and environment projects, $54 billion to be used for energy investments. Among these would be for smart electricity grid and so on. And some $48 billion would be used for other matters. But my point is that even the Congress and the Obama administration realize that you can't do everything at once, and you have to scale these and establish hard priorities. The main thing that this package will do in 2009 is to ease the suffering. This is tenderness in tough times.
Maya, do you think when you read this or listen to this, you're the policy expert on tax, on healthcare, on a whole bunch of things. Does this sound smart to you?
Well, I actually think that one of the things that needs to be part of this conversation is, not this conversation, but the bigger conversation is a humility about nobody actually knows exactly what to do. One of the things, I remember I was actually doing a TV show and somebody asked me a question, should we do the TARP bailout or not? And I said, I don't know. And I could see the producers in the back of the room like, no, don't say I don't know. You have to have a strong opinion. And we are in kind of uncharted territories. And one of the things that I do worry about are people who are believing the exact same thing today that they believed a year ago. Because the world has changed dramatically and we all need to be kind of updating our information, our thinking. I'm curious whether the question of how we best end the recession even is going to work. In that we have fundamental kind of disequilibriums in our economy that have been there for a long time. And I'm not sure we can cheat our way out of this.
So Maya, okay, I get it. It's hard to know, difficult, etc. You are president and you have to make some hard decisions. Knowing what you know, from the vantage point of all the study and experience that you have, what would you do?
Listen, I think the president's going to make different decisions than the best ones because there's always going to be politics there.
But what would you do?
I would outsource some of it to a really smart fiscal advisory board. And here's what I would tell them to do. I would put.
You're dodging this everywhere.
No, I'm going to answer.
What would you do?
Here's what I would do. I would actually let us go through some of this. We are in some ways focusing totally on how to prop up spending. And I think we need to focus more on how to bring back up saving.
And that means
individuals.
That you do nothing?
No, that means individuals are going to start saving more. I'm not going to buy a new car this year. I'm not going to buy a bigger house this year. We are going to save more. The question is, can the government then step in and spend our way out of this? I would back off a little bit. I'm very worried we're going to bubble hop. We were in a huge stock market technology-driven bubble. Alan Greenspan brought down interest rates. We created a huge housing bubble. We are now about to borrow so much money that we will be creating a government debt bubble.
And inflation.
And an inflationary bubble, which is the non-transparent way that we are going to get out of this.
So I guess I'm lost here.
Okay, well, let me just say that I think quickly, you may just have to pull the Band-Aid off quickly. We may have to go through some pain in order to right our economy. And what I do think we need to focus on is helping the people who didn't deserve that pain. When a plumber loses his job because we had a faulty credit default market swap somewhere else, I have a lot of compassion for we should really boost up a safety net there. We have a model right now of privatizing the upside and socializing the downside, and that's not right. So I would compassionately target a lot of help to people as we let our economy go through some growing pains that I just don't know can be avoided.
Okay. There's so much there, but I want to just go to a couple small parts. One thing we should know, just put on the table, the U.S. government stepped in to help Chrysler in 1981 or more or less that year. We gave them a significant investment. The government actually made money on the investment. I think it was about $300 million was the profit to the U.S. government. So I think it's very convenient to say we're privatizing on the downside, on the upside, and I forget
socializing the downside.
Socializing on the downside, because there is the opportunity for return here for the U.S. government.
But just one caveat. The reason that Congress voted for that bailout was to save jobs.
Right.
The government eventually made money. Chrysler, even in its recovery, shed over half of its jobs. A whole bunch of people lost their jobs in recovery.
Okay,
so the point is, you can do it for all kinds of reasons, but don't convince yourself you're doing it to save jobs, because a whole bunch of jobs are going to be lost regardless of what you do.
And let me also respond on the returns. We know, right now, we don't know what return we're going to get on the TARP funding, but the return is going to be negative, more likely than positive. You're talking about a return. If you look at what the Congressional Budget Office is estimating we're going to see, it's going to be negative returns. We'll get something back, but we're not going to make money.
So I guess I'm just struggling because I don't understand. So you're saying let us rip off the Band-Aid, and ripping off the Band-Aid is providing social services for those people who've lost jobs. I guess that means extended unemployment benefits, COBRA, Medicare, Medicaid relief for states. That's what I hear.
Right. There are things that have been proven to work: unemployment, food stamps, money to states.
Okay, I heard that. But what I'm not hearing is then how do you get things going? So what we didn't do during the Depression, we did nothing, basically. The government allowed the system to just work through the problem, and in working through the problem, it devastated society at the time. So I'm not hearing what do you do to actually get things going?
Look.
Yes, please.
I'll answer when I'm ready.
Well, all the recommendations right now, we seem to, when we talk about welfare, and we talk about it in a very negative aspect, but basically we're okay with it when it's corporate welfare. What I'm saying is, and I did not agree with the TARP money because it didn't help clearly. And what about helping students go to school so they can get the jobs that we need to create? We spent a half hour talking about construction jobs. Are any of you all going to build any roads? No. So, and some of the jobs they're talking about creating is in construction and retail. And those jobs don't have a lot of health benefits. They just sustain people. And so we do have to rip the Band-Aid off. We have to help people go to college to get the kind of jobs that are sustainable and come with some health care. And hopefully we don't attach jobs with health care anyway.
So Michelle,
you shouldn't have a job.
What would you do right now
I would not
to try to move the economy along?
I would not give a tax break. That's not going to help.
Then what would give me positives, not negatives?
We should help the people who are having trouble with their mortgages. The crux of this problem. None of that money, how much went to people helping with their homes? Zero. How much went to students with student loans? At zero. How much went to people who can't afford to take their kid to the hospital? Zero. And so that's where we should spend some of this money, so that people, if you don't have to pay your health care bills, you're going to go out and maybe spend some money that you actually have. And all we're talking about now.
Excuse me though, can we just go back a minute for a second? Let's think about how we got into this economic crisis. Lack of regulation, lack of oversight, corporate and financial greed that made risky decisions that screwed all of us. And as a result of that, what do they do? They came to the federal government and asked for a $700 billion bailout with no strings attached. And guess what? In 3 weeks, from AIG collapse to the bailout, they did it with no strings attached. So should we be surprised that they haven't figured out how to fix the system? They have no intention of fixing the system. We need oversight. We need regulation. Excuse me.
I'm going to agree with you.
Let me just finish for a while. We need corporate oversight. We need to transform our government and our economic decisions and flip them over. We need to be able to make sure that we're not bailing out corporations and financial institutions only, that we are putting money into where it matters. And I understand, I agree with you that we shouldn't have excessive debt, but let's remember, people borrowed money to do things, people who work for a living, borrowed money in their homes because they were trying to pay doctors, because they didn't have the money to pay for a hospital or put their kids to school. I had a member the other day who just said...
And it was wrong. It was wrong then,
But,
and it's wrong
because,
now. There is no such thing
why
as
it happened.
no good.
But let's think about why it happened.
Because they told us to borrow.
Because they told me, no, a number of things. It happened.
Okay, one at a time.
It happened for a number of reasons. It happened because people weren't making enough money to be able to send their kids to college. It happened because there isn't financial aid to public education so kids can get an education. Hey, I went to Penn State, and I'll date myself. I went and graduated in 1972. My dad was a disabled trucker. My mom worked the night shift in a nursing home, and I was able to only borrow $5,000. I was able to go to school, work summers, work at nights, and able to graduate from college without being buried in debt. My college tuition and room and board cost less than $1,000 a year. I would not be able to go to Penn State now under those circumstances and be able to graduate. I would not have had the money or been able to borrow enough, even if I was going to be small enough to do it. The reality is we have turned our economic policies up on top of their head. We have supported irresponsible financial institutions and corporations to make risky decisions so that they can make more money that hurts us. We have done nothing to support people being able to give their kids a better education by going to college or investing in our schools so that we can do that. We have done little to be able to lift people out of poverty or to provide the safety net that we need. And we have not dealt with the economic crisis of healthcare, which hurts everybody and is not good for our economy or our corporations either. So I do think that we do need a dramatic transformation. I think that the $700 billion bailout was done too fast, with no strings attached, and that we need to pause now and figure out what we do with the next $350 billion before it is done the wrong way. I believe that Barack Obama's policies will actually be to do things about making sure that we put some into the mortgage market so that people can save their homes. 10 million people.
Pell Grants.
And Pell Grants. And
Dr. Bremer went through that whole list of $1 billion. Did you hear anything about Pell Grants?
No. There is additional money for students, but and for their colleges. But
Okay, wait, I got a free-for-all here. Okay, we can only do one at a time. So, Dr. Spriggs.
It's real important to understand the additional part of why we got even further into debt, and that is because, you talked about how long do recessions last, but recessions are one thing. It has taken us longer to get the jobs back. So in 2001, the official recession was like 1 quarter. That's 3 months. It took us 4 years to get all the jobs back. The reason we end up going into debt is not because people are running out and borrowing too much money, it's because they haven't been making enough money. You can get out of the debt dilemma in 2 ways. You can tell everybody we're going to shrink the economy, pull the Band-Aid off, and we're going to shrink the economy down to where the American consumer can afford it. The first 3 years of the Bush administration, total wages in this United States were flat. Since 2007, they've been flat. So you can say that, but the pain would be enormous, and we wouldn't know how to unwind it because of the debt level. So I think when we say the recession ends, the recession doesn't end. The recession doesn't end until workers get their jobs back so that we don't repeat the error of people continuing to lose jobs, continuing to borrow money in order to make ends meet. So are we going to be off in terms of when the recovery comes, in terms of creating jobs? Yes, but are we going to be off in terms of creating jobs when we are still losing jobs and we need to have an engine of creating jobs? No, we will not, because there's a difference between job loss and the recession. So that's an important thing. The EFCA Act, the Employee Free Choice Act that Anna alluded to before, is an important element in terms of making sure that when we create the jobs, that in fact people will get paid enough so that they won't go into debt. You can't have, as we have had over the last 20 years, wages flat, productivity up. That means you're making more stuff than people can buy. That's why we have the debt. We decided that we could make the economy grow rather than by paying people more and having them buy more, that we would pay people less and they could borrow more. That's the system we set up.
So now we have a situation where, yes.
Let me inject a note of political reality here. I never thought I'd play the role of economic populist, but I'm about to. Because I agree with Anna, corporate welfare is one of the biggest atrocities we've seen in the last few months. When you hear something that's too big to fail, it means there's some people that are too small for us to care about them, and that's wrong. Now, here's the biggest challenge that any president has. You sit down in the Oval Office, you know you don't have all the answers, and you call in the people who you think have all the answers, the financiers, the economic prognosticators, and all of that. And what always happens is they will scare the bejesus out of you. Bill Clinton came in to office, he had all these grand plans. And he sat down, and everyone came to him and said, you can't do that, you can't do that, you're going to upset the bond market. James Carville, who was Bill Clinton's economic advisor, the great Louisiana populist, he went out of one White House meeting and he said, the bond market, the bond market, the bond market. When I become resurrected, I want to become the bond market because it's the most powerful force in the world. George Bush, when we had the first disaster in September, they came into him and said, do you want to be the next Herbert Hoover? Everything is going to collapse. The credit markets are completely frozen up. We're going to a Great Depression. We have to pass the $750 billion transfer of money to the Treasury Secretary. No strings attached. He doesn't have to explain or have anything transparent. You got to do it now. Congress turned him down. Both Democrats and Republicans voted against the first bailout. And even though they were warned, if you do this, the whole thing will fall apart in 24 hours. What did they do? They took 3 days off for the Jewish holiday immediately thereafter, sort of putting the lie to the fact that we absolutely positively had to do it overnight like Federal Express. The bottom line is the biggest problem Barack Obama is going to have is this. The same people who went in to see Bill Clinton and the same people who went in to see George W. Bush are going to come in and say, this is what you can't do because the world will end. I don't think the world will end, but this is going to be a powerful impediment to anything that he wants to do, whether it's to the left or the right or to the middle. And I think the single best thing he could do is to say no more corporate welfare because there are 93% of Americans who are paying their mortgages off. How do they feel about the people who are getting bailed out, some of whom made decisions that were not in their best interest? And some of them are responsible for those decisions, and they're not all predatory lending victims. And what about all the corporations and the banks that didn't take the risks? What does it say to them when they see the big guys getting bailed out? The single best thing Barack Obama could do is something that I think is right out of liberal populism, which is say no to corporate welfare once and for all, and say to the people like Paul Volcker and Larry Summers who come to you and say the world would end if you don't give the banks this money, say, I'm going to take that chance because I think we're sending the wrong signal by bailing out the people who are too big to fail.
So you think Lehman should have been let go?
No. The first mistake was way back.
Lehman should have been let go or not?
No. The original
Yes or
mistake, the original mistake was AIG, Fannie Mae, Freddie Mac. And Fannie Mae, Freddie Mac was the worst kind of corporation. It was backed up with a government guarantee, so all the losses were public and all the profits were private. That was the original sin. Lehman was only several steps down.
Fannie Mae and
No, that was June. That was June that we bailed them out. That was June.
No. Let's wait a minute.
I'm confused.
Okay? Again, in the interest of getting facts on the table, Fannie Mae and Freddie Mac are institutions that have been around for decades, one of which is 75 years old.
They were only privatized in 1968. They were completely different before 68.
1968 wasn't yesterday. It wasn't.
Well, you said 75 years. I'm simply saying they did not take on their current form.
For a long time, privatized in 1968, fine,
Right.
but we're talking about basically 40 years there that they've been in business doing what they do. Again, all I'm trying to do is get the facts on the table. The structures that existed for decades.
Their lending policies went haywire over the last 10 to 12 years, and along with everyone else's, but they led the market because they had 50% of the mortgage market.
And why do you think their lending policies went screwy?
Greed.
Greed?
No.
Greed? No.
We could just get so was there any kind of pressure from Congress
Oh, yes.
to get more lending,
Yes.
particularly to minorities when it came to housing?
This will take 30
Is there any truth to that?
This will take 30 seconds. I really didn't put this on. This will take 30 seconds.
No, let's clear that up.
She asked me a question.
No, we have to clear that up because that's way too...
That is not
Okay, no.
No.
Each of you, excuse me.
Okay,
Each of you can answer the question. John can start, and we can go from there.
In 2002, Enron collapsed. How did they collapse? They faked their books. They lied, they cheated, and they stole. They collapsed within 10 days. They lost 14,000 jobs. They went out of business. They stopped at least doing damage once their accounting fraud was exposed. In 2004, Fannie Mae and Freddie Mac were found to have had accounting fraud. They cooked their books. They had chief executives who were making much more because they had basically pumped up their bonuses. What did we do to them? Did we shut them down like Enron? No, because they were too big to fail. And in order to keep Congress away from regulating them, they expanded and accelerated their mortgages and their credit, easy credit, to a whole bunch of people who shouldn't have gotten it.
Why did they do that?
Because they wanted to, because they had directives from Congress. We want more people to own homes, and we don't care about the details. And some of those people should have gotten homes, but a lot of people should have waited in line because let's put it this way, a zero down payment mortgage is probably not a good idea for anyone.
Okay, so Dr. Spriggs, you disagree? Give me your point of view.
No, when you analyze which share
That's
of the
right.
subprime market was held by Fannie or by the regulated banks, it's
That's
this
right.
teeny
It's
tiny little
tiny.
sliver.
Tiny.
The overwhelming bulk of the subprime loans were from the non-regulated
That's
sector,
right.
from the investment banking side.
So tell me
and
what-
those loans weren't in conformity with Freddie or Fannie or backed by Freddie or Fannie. So to say that Congress said that minorities should own homes and that's what caused this problem, it is
Oh,
not.
no, I didn't say it caused it. I was asking about what spurred them
What-
to do more lending.
No,
That's been a headline in
their problem was the same problem that UBS had, that if you have, in their case, no diversification, all of Freddie and Fannie is in the housing market, and you have the value of those assets fall by 20, 30, 40%, you're in deep trouble.
Right.
So that is what
So
broke them.
do you think it was right to step in and
Yes.
basically nationalize Freddie and Fannie?
Yes, and I think the point raised about having a conflicting mission is probably a correct point to
That
raise.
was created decades ago.
Created in '68, the idea that you could have a market motive pleasing private stockholders and at the same time try and meet a mission which wasn't really driven by rate of return but by a mission of getting home ownership. So those two can conflict. There was always a problem for Freddie and Fannie to meet both those missions because they only match up sometime. But that's not why they failed. They failed because the housing market was priced incorrectly. When those assets fell, they didn't have 5%. They had all of their money in the real
Right.
estate market.
Right.
So of course they were going to fail.
Michelle, do you have a different opinion?
You know, I think we're getting dangerously close to blaming this on black people. What I'm saying is, people want to blame Freddie and Fannie for the fail, and what you were saying is
No, I
absolutely
think Wall
true.
Street has been the source of this
No, not true,
conversation.
right, no,
It
but
has not been at all
But
about
I'm just
race.
look at the conversation in general. It's still not on the individual. And how we're going to get out of this recession is when he has those advisors, all those advisors you named for Barack Obama. Where are the mamas? Where are the people who don't have health care? Those people should be at the table because we are being ignored. And that's why we have the same policy here. Why do we still not have universal health care? Why do we still have people who have to borrow and have decades to pay back their student loan debt? Why is this still on the table? And that is my concern. This conversation is the exact same whether the president is white or black. We're still not focusing on the individuals. And I am still concerned that we're gonna stay in this recession, and if we come out, it's still gonna be the same of more. People are not gonna be able to get health care. People can't send their kids to college. People are not, where's the affordable
So
housing
Michelle, if
component
you're
of this?
president tomorrow, you are standing on that stage, oath of office, and you are prioritizing the issues confronting this country. Give me the top three.
Healthcare and
no?
education. Healthcare, education,
Okay,
and
exactly
housing.
what would you do?
I would work on, instead of bailing out Wall Street, I would work on a way to provide health care to everybody in this country.
So to ensure the 46 million Americans who are uninsured, that would be your first priority.
And the people who are underinsured.
Okay, so, and that would mean some subsidies or some nationalized health care? Exactly what would that mean?
Absolutely. Some
So
subsidies. Both. Absolutely both. We subsidize on Wall Street. And I would increase the...
Why are you pointing at me when you look at me?
Because you're the prince from Wall Street,
All I
remember?
know is I'm paying into
You're
the
the
kitty.
prince.
You're not subsidizing me, just to be clear.
Right. No, I wasn't looking... there's some cute guy over
You
there,
can
so I
look,
was looking
I'm
over
not
that
cute
way.
guy, you can look at me, that's cool.
And then I would work on education, because...
Okay, and what does that mean, specific?
So that people do not have to borrow to go to school.
So would
That there
college
more-
be free in America?
Yes.
Okay, I'm just,
Yeah. Yes.
so that's,
Yes.
So college?
Yes, absolutely. And isn't that, like, you say that, and people, I know there's somebody who's watching this right now going, she's an idiot.
no, that's not true. Because
No,
listen,
but if you say that, that's the, no, I said-
College is free at Princeton today. I went to Princeton. The endowment is so large that you do not borrow money to go to Princeton University.
If you make, if your household income is about $60,000.
Now it's about 180.
It's over $100,000.
Although that's changing now with their endowment down about
No, but
30.
I'm just saying, so let's be specific, saying that
So
it's
everybody in
crazy.
America, go apply to Princeton right now.
Right, I'm just,
But I mean, that's what it sounds like.
Barry Rand, our chair is here, and he will figure out a way to make that true.
Wait,
all I'm
we're
trying
gonna
to
go
do
down
is, when
this
you
road,
said
right?
people said you would think you were crazy, I'm just saying that the Harvards and Princetons of the
Absolutely.
world have already done that because the institutions are so wealthy that they've been able to say,
Right.
if you can't pay, you're not leaving here with a loan. And no one has thought that that was crazy. That's all I was agreeing with you
Right. So
and
wouldn't
saying
that
that
be great
that's
if
not
they
a
could do that
crazy
for,
thing.
for Howard or,
I don't disagree with you.
right.
I'm trying to be a moderator who's moderate.
Right, no.
So-
So I'm saying definitely, free education and then affordable housing. You take care
And
of
what does
these-
affordable housing mean? Does that mean more housing projects? Does that mean more FHA loans? What does affordable housing
It means
mean?
building a house that you can get with a decent loan that doesn't take up more than 40% of your net pay.
Now, do you think home ownership truly is for everyone? Is there anything wrong with renting in
I
America?
think home ownership is right at the right time. And I think that you can't get a home if you don't have enough money to sustain it.
So
it's
is
the right
affordable
time.
housing always about ownership, is what I'm asking you? Is it about renting as well as ownership?
I
or-
think it is. I think,
Okay.
absolutely, there's some people in our society who don't make the income to afford a house. And I think it's okay to rent. You are not a financial failure if you are renting. There's some markets where that is just the reality. But I would hope that even in those markets that people can build up to owning a house. There's some markets in this country where people think, I am never going to be able to own a house. And D.C. is really
Right.
one of those markets.
Right. Maya, you've been trying to break
I wanted
in
to just
here.
make a point about separating two really important issues here. One is the economic recovery, and two is kind of transforming our whole budget. Because I think you had asked me what I would do on the economic recovery. I didn't get to finish, but I would do a stimulus package that's smaller than what we're talking about, see where we are in another 4 months, and think about another one. And I would focus on things that have worked in the past. But I also think there's a lot of changes.
What has worked in the past?
Things I'd mentioned before: unemployment, aid to the states, food stamps, targeting people who need the help the most and would spend the money. But I also think these whole focusing on how we shift the budget is also critically important. I think our budget is completely screwed up in the way that we allocate resources in this country. We have, I think, 2 or 3% that goes to education at the federal level. We spend $8 on people over 65 for every one we spend on people under 18. This, to me, is not a long-term budget. But I don't think kind of cramming through those changes as a fiscal recovery bill is the way to do it. They need deep, thoughtful change. And what I'm hopeful about is that the conversation in the country that takes place about how do we fix our economy gives us a two-part solution. How do we fix the economy in the short term? And again, I worry about borrowing too much to get our way out of it. And how do we change the way that the federal government works with people and focuses on all these different things and gets away of some of the entrenched policies? And I think you guys just brought up a critically important policy. We spend tens of billions of dollars, maybe over $100 billion a year subsidizing home ownership. It's not the answer to everything. We act like it's like baseball and apple pie, it's the American dream. It's not always. When you're young, you need to move. You need to be mobile. Capitalism's based on mobility. We need to rethink some of these fundamental things and find a way as a country to talk about critical national issues, which we haven't done a very good job of in recent years, and hope that we can broaden that conversation to how to change the budget.
So you're Barack Obama, you're being sworn in tomorrow. I'm going to ask each of you to respond to this question, and I'll start with you, Dr. Spriggs. You're standing there, you're walking into the Oval Office for your first day, after the swearing in. How long do you think it would take to really get things going, and do you think it is an impossible task?
First, it's not an impossible task. It's going to take a long time.
And put some months, years on it?
I believe that if they pass his Stimulus and Recovery Act, we will see a positive change in the economy somewhere late 2010, maybe early 2011. We'll see things move in a positive direction. I think the number one thing he has to think about is the impatience that Americans have for one another, that we will not be empathetic with one another. When he starts his second term, and it really is obvious that we are in a recovery mode, leaving the safety net in the hands of the states means that the states will do what they did in the 1980s. They're going to get mean. They are not going to be patient. People will be intolerant of why are state resources going for people who still haven't gotten onto the train. And they will want to leave people behind. We should not have the situation we have, which is, you know, it's a great saying. We don't live in a red state. We don't live in blue states. We live in the United States. If you're poor, you do not live in the United States. You do live in a red state or a blue state. And we saw that in Katrina. You can't go from Louisiana to some other state and then think you have some safety net or some way of being connected. So that shouldn't be. We have Social Security, which Maya just mentioned. If you were in New Orleans and you had a disability check, you could go to Oklahoma or wherever they sent you because your disability check went with you. If you were unemployed, the unemployment system of Louisiana went bankrupt. We had to figure out how to get you an unemployment check. Could you get an unemployment check? We had to figure all that out. That should not be a state-based program. Capitalism is based on mobility. There are a lot of states where the job loss is going to be more severe than others. You need the mobility. The unemployment system, we're about to bail out the states for the second time in 30 years. Most of them will be bankrupt, and by June or July, they won't have any money in their trust funds. At that point, we should just federalize the system. There should only be an unemployment system. It should be federal. TANF benefits, the reason we have this disparity between children and adults, children cannot work by law. The elderly cannot work because they're not competitive in the labor force. But we insure the income of the elderly. If I am taking care of my parents, I'm helped out by the fact that they're getting a Social Security check. If you're a single mom taking care of your mom and your child, we help you out on the mom. On the child, we tell you good luck, hope you make it.
So what would you do there?
We should ensure that children who are in the old AFDC, now TANF program, get the same benefit as if the missing parent were dead, because from that child's perspective, they are. The disparity between a survivor check, if you're in Mississippi, a survivor check is like $1,000 a month, a TANF check is $138 a month. People talk about the odd incentive of discouraging marriage when people want AFDC. With that disparity, you're better off if your missing dad is dead. What kind of incentive is that? So we should not have that kind of disparity. Children are brought out of poverty by that survivor's check. We currently have more children getting a Social Security check than who get a TANF check. And in this economy where joblessness is going to be a reality, we need to figure out how do we take care of people who will be jobless. Because the labor market took 4 years to recover from the last recession, for us to get all of the jobs back. With the plan that will be put in place, maybe we can cut that to 3 years, but that means 2011 before we're just back to even keel on jobs, not meeting the needs of all the people who will be entering the labor force in the interim. So it is getting Americans attuned to this is going to be a long process. We're not going to get everybody back to work right away, and we have to be sensitive to the fact that joblessness is going to be an economic reality. It's not time for us to be picking on one another. It's time for us to be figuring out how to have that safety net that protects us. And again, that recession that we went through in 2001 was made more severe because we ignored the people at the bottom. They didn't make a blip on the GDP. Their suffering didn't matter to those of us who were doing okay. And we have to figure out the balance sheet on the household side. You know, if you make sure that you recapitalize UBS, think about it from the household perspective. I still owe the same amount on my house, even though it's worth this much. I still owe the same amount on my house, even though my 401k is now here. It's a 101k. So here's my debt, here's my equity. When we went into this recession, the debt to equity ratio on the household side was already at a record high. The amount that people had to pay to service their debt was already at a record high. So given the fall in assets on the household balance sheet, we have to address that. And thinking that people are going to just save their way out of it can't happen, because the number one debt that people, you had them raise their hand, the number one debt they hold is their home. The only way you can get rid of your home is to get rid of the home. So that's not an option. So for the 93% of people who are making their payments and the 90-some% who will continue to make those payments, they are still going to be stuck in this awkward position, high debt level, low equity, and they're going to do what we see them doing now. Their only solution is, I have to cut back on consumption because I got to save my way out of it. And saving your way out of it means not consuming, which, ask any retailer, this is not a good answer.
Okay, so we've got not even 5 minutes. I'm going to do a lightning round. One question each. Dr. Briggs, thank you for that. 30-second answer. Michelle, is it a good thing that there's no credit for individuals right now?
Yes.
Okay. Anna, what do you think industry-wise is the place where you're most concerned about workers?
I actually think right now it's kind of across the board. The public sector is being devastated because of the lack of money, and unless the economic recovery actually puts money into the states, into the local governments to keep those services to people who are losing their jobs going, there's going to be massive layoffs. In the retail markets, we see that, Circuit City shuts down with no ability to stay up. 30,000 people lose their jobs. So I think that there's a threat of job loss, but my worry is that we don't pass the Economic Recovery Act to rebalance the system. And I think that we can actually dramatically make a change. I think Barack Obama has to act quickly, he has to act boldly, and he has to do some of the things that were talked about in terms of money into the states, money into the local governments to keep the safety net there and keep those services that are essential going. But he does have to invest in real jobs. Like energy, like infrastructure, because there are really good projects out there as well, and we need to do long term. But like healthcare. Healthcare is not something that we have to figure out. We've been talking about it forever. We had a policy in '92. All the Democratic presidential candidates basically agreed on one. We can move that. That would be something that would actually, if we deal with technology, that would put people to work. If we deal with renewing the system, we can put people to work as well. So I just think that there are ways that we can act quickly. And we can all sit around and worry about we're going to lose. But if we actually act on the economic recovery, if people can have a voice in the job so they can actually turn it into a good job, so they can actually make enough money so they can actually buy a home someday or put their kids to college, that will help as well too.
Okay, John, 30 seconds. The media, what can you guys do to make it better?
Often shut up. Mario Cuomo
30 seconds.
said that campaigning is poetry, governing is prose, and it's a lot harder. One quick thing, a piece of advice for Barack Obama. We have seen now the split between economic recovery liberals who say we have to address the economic downturn fast and transformational liberals who want to bring us everything from free college to universal health care. The last Democratic president, Bill Clinton, got into trouble because he tried to do too much too quickly.
And didn't do
fine. But he tried to do too much too quickly, therefore he didn't get enough done. If you take too big a bite of the apple, sometimes the apple will fall on your head.
Maya, in terms of policy makers like yourself who are out there, if you were advising the president, is there one piece of advice that you think would be helpful to him that would make him more successful in what we know to be an extraordinarily challenging time?
Well, I don't know if it'll make him more successful because it's not the kind of advice the country always wants to hear, but I can't sort of take myself out of my point of view, which is worrying about the long-term fiscal health of the country. And that is, I think he has to link the stimulus and spending $1 trillion now with long-term budgetary reforms, because I think the real risk is right now you have Congress that's going to say, you want to spend $825 billion? We'll give you $1.5 trillion. But then our help is gone. When he starts to say, okay, now I want to repay it because the economy's strong again, they'll say, no, we've done our work. And so I really think he has to meld these two in saying, here's the stimulus package, whatever it is, it's not going to be perfect, but I think he'll be informed and it will be helpful. But at the same time, there has to be included a mechanism for dealing with the long-term fiscal imbalances so we don't have this huge government debt crisis next.
Okay, 1 minute left. Robert, Wall Street seems to have a public relations problem. What would you do to fix it?
Well, I think that people have to look in themselves in the mirror, and I think before they make a decision, they need to say, am I happy to read it in the front page of the Wall Street Journal based on the answer I give? And if they don't think that it's kosher, they shouldn't do it. Our ethics have to go back to being beyond reproach. You know, in our business, there were never contracts. It was on the phone, you're done. Your word is your honor. We didn't have 100 pages of contracts. We have to get back where people believe we're servicing the clients the right way. And I've been hearing for 2 years. I speak to Barack almost weekly. I've told him 50 times, I know Wall Street greed, we hear it, we get it. But I actually think that that is not necessarily representative always of who Wall Street is. Okay, there's a lot of people around this country that work on financial services that do a lot of great things for this country too. And I would tell you, just like we ballooned our balance sheets, is no different than the individual ballooning their balance sheet. And I think at the end of the day, we all have to live within our means. All of us, the companies and the individual, and we can get back to it.
Dr. Bremer, should Bernanke stay as Federal Reserve Chairman?
Yes.
Great. Okay. Thank you, Dr. Andrew Bremer, Robert Wolf, Maya McGinnis, John Funn, Anna Berger, Michelle Singletary, and Dr. William Spriggs. Very heated, great panel. I think I need a nap after this. Thank you, everyone.